Good morning, you're watching Market Cafe with me, Shreyansi Singh and Snehi Shah on ET Now. And over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. But Snehi, what sell-off we've seen and what a day it has been, right, for the US market?
Well, for the US markets, because we did pretty well actually yesterday in the trading session, but that can't be said, we can't say the same for the global handover coming in, because US markets closed in red. Asian markets are trading with a very deep cut of red right now as well. But let's focus on the US markets first. Futures tight. Dow Jones Industrial Average sat near flat last night following the index's worst session in over a year. Investors also awaited key labor data that is due today morning, of course, in terms of US times. Now, those moves follow a sell-off on Wall Street during Thursday's session. The Dow tumbled about 530 points or 1.3% lower, marking its biggest daily drop since March 2023. It's also its fourth consecutive losing session. The S&P 500 tumbled 1.2%. Nasdaq was down the most out of all of these three indices with a cut of 1.4%. The three major averages swung into the red, and how, in the afternoon as crude oil jumped and Minneapolis Fed Reserve President Neil Kashkari questioned if interest rates should come down amid the sticky inflation data. The Dow has led the three major indices down this week, pacing for a loss of 3% and its worst weekly performance since the March of 2023, and the S&P 500 and Nasdaq have slid each around 2% through Thursday's close. Now, those moves mark a retreat after the strong first quarter concluded last week, leading some market participants to wonder if a correction is warranted following big gains. Remember, especially for the Nasdaq, over the course of the last 1 or 2 months, we've seen an Nvidia fueled rally. So, well, seeing such a correction and Nasdaq underperforming the other two indices majorly is not quite surprising when it comes to moves, when you keep in perspective and keep in mind the rally that all of these three indices have seen since the start of the year. But investors will also be watching out for the all-important jobs data coming this morning. Economists polled by the Dow Jones anticipate non-farm payrolls growing by 200,000 jobs and the unemployment rate ticking down to 3.8% in March. But, well, this is largely the handover coming in from the US markets. Let's also shift focus and talk about Europe. And, well, not as quiet a somber picture as US. Some positivity being seen in Europe because the pan-European stock 600 index closed with gains of almost 0.2%, with sectors in the mixed territory. Mining stocks gained 1.7%, chemical stocks slipped 0.5%. Volvo Cars was the one to watch out for because those shares rose nearly 7% in intraday session after the automaker posted a record single month sales for March. But largely, this is the handover coming in from the US markets and from the European markets. Deep cuts coming in from the US markets, and especially with our first MPC policy being today for FY25. This is the first one, and it's the last one before India heads to election. So that is also going to be a key event to watch out for. And, well, we can only hope that the Indian market is able to sustain the sell-off that the US market has seen. And we'll only have to wait and watch and see how our markets react today. But with that, also take us through what's happening in the world of crude, because on one hand, you're seeing equities tumbling. On the other hand, there is no stopping for crude. WTI has crossed 85, Brent has crossed 90. So tell us what's happening. Lots of exciting stuff happening.
Absolutely. So it's very interesting what is happening with crude. But before that, it's also very interesting what's happening with gold right now.
Well, yes, another record high for gold.
Yeah, but then now, it's taking a little bit breather after that record high. So it's interesting to see that move also play out. Right? So when you look at gold prices, they took a breather after hitting that all-time high that we just talked about, above 2,300 per ounce earlier in the session on expectations for lower US interest rates this year as investors await more clarity on the timing of cuts. Moving on then, let's talk about oil then. Crude oil future recouped losses from earlier in the session as well as tensions in the Middle East continued to mount. Now, when you look at the WTI contract then, that gained 1.3%, 1.4% rather, to settle around that $86 a barrel mark. And Brent also advanced 1.4% to $90.65 a barrel. Now, it was the highest settlement price for both since October 20th. And reports are also saying that Israeli embassies had been put on high alert after Iran vowed retaliation over a missile strike on its consulate in Damascus earlier this week. Israel Defense Forces have cancelled home leave for combat troops amid escalating confrontation with Tehran. According to reports, oil prices have peaked this year, booking 3 consecutive months of gains. So that's the kind of trend that you've seen coming in for oil, with US crude adding nearly 21% and Brent adding 18%. Now, the rally has been driven by geopolitical tensions in the Middle East and Eastern Europe, as well as a tightening global crude market. So those are largely the kind of trends that we've seen coming in for the oil market. But keeping it with oil then, crude prices could hover around the $90 per barrel mark by year end, says FGE founder and chair Dr. Firuddin Fisharaki in an exclusive chat with ET Now. But he expects prices to stabilize by next year. Listen in to what else he had to say.
So we're looking at the prices $90 to $95 a barrel by the end of this year. And next year, maybe a little bit lower, $75, $85. And medium term, the demand growth continues to grow. Maybe 6 million barrels per day more demand is there to be achieved before we reach a peak in the early 2030s. And after we reach a peak, it will be very flat demand. It's not going to collapse by any means. So this idea that somehow renewable energy will come in and because of carbon issues, the demand will collapse is certainly not true. Everybody promised carbon neutral by 2050. That cannot be achieved. I think India's 2070 is much more reasonable and achievable than many of the 2050 stories. So basically, oil demand will peak and flatten and begin to come down. But by 2045, 2050, our demand is about the same as this year.
All right, with that, let's get a move on and talk about all the important events that we have to watch out for in today's trading session. But well, yes, all of them are being topped by RBI's MPC rate decision. That will be a key one to watch out for. And also, we'll be watching out for Governor Shaktikanta Das's commentary and the rationale behind whatever rate decision they take. The street is largely expecting rates to remain status quo, but the stance expected to change, or we'll be actually focusing on what the stance is and what the commentary is behind that. But let's just focus and talk about what's happening globally. From the US, like I mentioned, that employment report as well as non-farm payrolls numbers will be out. From the Eurozone also, we'll have retail sales data coming out. So important macroeconomic indicators. And Wall Street is also largely going to be reacting on these numbers coming out of the US. So we can expect some action on Wall Street on Monday as well on the back of this non-farm payroll and the employment data. Moving on, let's just focus back home and talk about corporate action, because the Garwari Technical Fiber share buyback will be closing today. The right issue of Hindustan Construction Company, which is HCC, that will also be closing today, and today is the last day to buy shares ESAB India to be eligible for their interim dividend. Shifting focus to the primary markets then, when it comes to IPOs, today is the last day to subscribe to the Bharti Hexacom IPO, and lock-in period is also ending for Bharat High, in which 19% equity is coming out of lock-in. And when we talk about other events, let's start by looking at what's happening on the political front. Congress is largely expected to release their Lok Sabha election manifesto today. Global cues then, the EU-US Trade and Technology Council will also be in Belgium, so we'll watch out for how that event pans out. But largely, these are all the cues to be watched out for in today's trading session. Clearly, all of them being tracked by our MPC policy outcome today.
Well, there's a lot of commentary that is also important that is coming in as well. So let's get a load on that as well. Just a day after Fed Chair Jerome Powell reiterated his stance over the rate cuts this year, Fed officials Austin Goolsbee and Thomas Barkin were seen backing the same as well. Chicago Fed Reserve President Goolsbee spoke on similar lines, saying that they need to be convinced further that inflation is headed towards their 2% target. Meanwhile, the Richmond Fed President is, however, of the view that restrictive rates can trigger an economic slowdown further.
Meanwhile, let's keep it with commentary coming in from the Fed officials, the Minneapolis Fed Reserve Bank President Neil Kashkari took a more advanced stance, floating the possibility of no rate cuts this year, which is rather surprising, and that commentary was not taken well by Wall Street. Kashkari added that if inflation continued to come in stronger than hoped, he anticipates the Fed would hold its benchmark policy rate at the current 5.25 to 5.5% range for a longer period of time. That still did not work. Further rate increases are not off the table, but they are also not a likely scenario given what we know right now, is what he added.
Moving on then, US President Joe Biden, in a phone call to Israel Prime Minister Benjamin Netanyahu, threatens to change policy if steps were not taken to prevent civilian harm and protect aid workers. He also added an immediate ceasefire was essential for meeting those aims. The Erez Gate in northern Gaza will be temporarily reopened for the first time since the start of the war. Similarly, few other ports and aid from Jordan will be allowed to enter for humanitarian deliveries hours after the call.
Well, moving on then, MPC's first meeting of FY25 has kicked off. The street expects the central bank to maintain status quo. Let's go across to Ankur to tell us what to expect from today's rate decision. Ankur, good morning.
In a few minutes from now, Reserve Bank of India Governor Shaktikanta Das will detail monetary policy, and the expectation this time is that it may be 7th time that there will be no change in repo rate. Apart from that, liquidity situation is something which needs to be washed out, because there has been instances in past 2 months where several stakeholders have cried over the liquidity situation. So it will be important that what is the which Reserve Bank of India is given on the liquidity front. But after rupee has hit a record low, it will be also important to understand from RBI Governor what is the view of the regulator on the currency, and more than that, is there going to be any change in GDP forecast, because there has been positive commentary which has been coming not only from Reserve Bank of India side, but the international front also. There has been revision in India's GDP growth. So it will be interesting to see whether or not MPC decides to change forecast from 7% to higher. Apart from that, inflation is also something which Reserve Bank of India has kept its guard on, and the forecast has been 4.5% for the next financial year. So it will be interesting to see whether or not there is a change in the inflation forecast as well.
Speaking to your channel, Governor Das said that the RBI is closely monitoring data for future action and will decide whether to play T20 or ODI in terms of rate cuts. Listen in to a slice of this exclusive conversation.
At that time, front-ended action was required, and we took the front-ended action, including an off-cycle meeting which we held of the MPC in May of 2022, where we announced a repo rate increase of 40 basis points. The market was taken by surprise, but I was surprised because if you read the April 22 MPC statement, we had given clear indications that we will be moving very fast. But that is all history. So that was a time when front-ended action had to be taken. And now for several meetings, it's pause, both in terms of stance and in terms of the rate increase, or on the rate front. So we are watching the numbers, incoming data points with regard to prices. We make our evaluation of the the evolving outlook. Based on that, the future action will be decided. As it looks, the elephant has gone for a walk. Okay. The elephant can come back anytime. And given the uncertainties that we have, I mentioned weather-related events and all, we would like, inflation to be sort of, inflation to sort of durably be around 4%. It cannot be just one-off number or just 1 month number touching 4%, which will give us the satisfaction. It has to be sort of sustainably and durably at around 4%. That is something which will give us greater confidence, but the direction is very clear. Inflation is on a downward trajectory.
All right, well, that's what the governor had to say. ET now, but we'll also be closely monitoring on what he has to say on the MPC outcome today. But viewers, with that, we'll slip into a very short break on this edition of Market Okay? When we return, we'll take a look at how the Asian markets have opened up this morning, so you stay tuned.
Thank you so much for staying tuned in. Well, let's take a look at the Asian markets then. And Asia Pacific markets are largely falling, led by Japan's Nikkei, mirroring moves on Wall Street after those comments came in from the US Federal Reserve officials. Now, when you look at Nikkei on your screens, it's down 2.4% nearly after briefly crossing that 50,000 mark on Thursday. So those are some deep cuts that we're seeing coming in for Nikkei. And Japan's household spending in February fell much less than expected, down 0.5% or 0.5% year-on-year in real terms, compared with expectations of a 3% fall. Now, those are kind of moves that we've seen coming in for Nikkei, but when you look at ASX 200, that one is also in the red as we speak. Let's see if we can get that on the screen as well. And that slipped 0.8% thereabout at the open after a 2.2% drop in exports for February. On your screens, down 0.8% as we speak, and South Korea's Kospi as well in the red, and decidedly lower because it's down about over 1% as we speak, reversing gains after leading major Asian benchmarks yesterday. So those are the kind of moves that we've seen coming in Kospi as well. Now, Hong Kong's Hang Seng Index returned from a public holiday, up about 0.4% earlier. And right now, it's not doing all that well either. It's down nearly 0.9% thereabout. But mainland China markets are still shut. But Asian markets still not doing all that well as we speak. Now, yesterday we closed back home. We closed at the 22,514 level. And today, the Nifty implied both on a spot and futures basis is indicating a tempered start for us, Nehi.
Well, absolutely tempered start, but we also need to keep in mind that we have our policy today, and if it goes according to what the street is expecting, if the outcome is what the street is expecting, then we could see a slight bit of a recovery in today's trading session. But at the same time, we also have to keep in mind the largely negative moves that we've been getting from our global peers. So we'll only have to wait and watch about how the markets pan out today.
Welcome back. Thank you so much for staying tuned in. Well, let's get a move on then and take a look at some of the action coming in from the RBI. Then the Reserve Bank of India has deferred the new rules for exchange traded currency derivatives, and the deferment is coming in till May 3rd. My colleague Anurag Joshi is standing by with all of those important details. Anurag, tell us a little bit about the ETCD rules. What kind of word is coming in from the RBI as well?
The Reserve Bank of India has deferred the implementation of a key rule on exchange traded derivatives by about a month. The RBI said that it is deferring the rule which seeks to limit the use of these products for hedging to May 3rd from April 5, which was planned earlier. The new rule seeks to cut speculation in the derivatives segment of the foreign currency, and participants will need to have valid contracted exposure to trade INR-linked FX derivatives up to an amount of $100 million. The move also comes after the rupee touched a historic low against the dollar earlier today. Traders with speculative positions in FX derivatives have to unwind or square off their positions, and this had led to a drop in volumes in the local FX derivatives markets ahead of the RBI measure, which was supposed to kick off tomorrow, but now has been deferred by about a month.
Well, all right, let's get a move on from then. And now Indian Commercial Pilots Association, the ICPA, has written a letter to the Tata Group chairman, Chandrasekaran. This letter comes as their support to Vistara pilots. Sumit Chaturvedi filed this report earlier about everything that's happening at Vistara. Take a look.
Now the Indian Commercial Pilots Association, which represents Air India pilots, has come out in support of Vistara Airlines, taking the whole thing to a different level. ICPA has written a letter to Tata Group chairman N. Chandrasekaran, in which ICPA has said that Vistara pilots' demands, they reflect broader challenges within Tata Group. They also said that threatening pilots with disruption is unethical. The issues faced by Vistara pilots is not unique to them. It reflects the overall concerns of other Tata Airlines. We can tell you other Tata Airlines are Air India Express. Vistara, you know, that is a Tata Group airline. So this issue of, there are multiple issues of 70-hour fixed remuneration, which was yesterday addressed, leave approval, rest period. So these were the concerns raised by Vistara pilots so far. They were reporting sick, leading to many cancellations. But now this time, an important development has come that they have got support of other Tata Group airlines. It's really for Tata Group to see how they are going to address all these challenges.
Well, thanks, Sumit, for all of those details. Moving on to Motown, then, South Korean auto major Hyundai Motor is planning to bring its luxury car brand Genesis into India. Genesis competes with high-end luxury cars, Mercedes and Audi in the global markets currently. ET Now's Sumit Chaturvedi filed this report earlier as well. Take a look.
Genesis luxury brand of Hyundai is planning to come to India. Hyundai is planning to launch the cars here. They are luxury brands which are competitive to Mercedes, Audi, BMW across the world. These are the brands which are known for their comfort, luxury. Now, Hyundai has given these cars to some of the top management people in the company. They cost 50 to 60 lakh rupees if you talk about the Indian rupees. So the cars are being going on testing from the many months. Some of the cars were used during G20 summit as well. So it's clearly a time when Hyundai is trying to make a overall entry into Indian luxury car market, which is around 50,000 units per annum, currently dominated by Mercedes, BMW, Audi, etc.
Well, moving on then into some somber news when it comes to the Indian rupee. The Indian rupee is weakening against the US dollar. It hit a new record low yesterday also after the rising demand for dollar by oil companies. At the same time, crude prices have logged gains on the back of supply concerns. This is also amid geopolitical tensions and global macro growth. To get us more perspective on that, let's go across to Somi to get in all of those insights. Somi, take it away. Somit, could you give us more perspective on the connection between rupee and oil, please?
Firstly, if you see on the city note that has come in fact, on Page Industries and Bata, they are both they're negative on both the stocks. If you see Page Industries specifically, they are saying that the earnings downside is much more going forward, given the fact that competition is still high in this sector. They're also expecting management to remain cautious on the demand environment, and they're expecting more earnings downgrade to come in post the Q4 numbers come in. For Q4, Citi is expecting only a 6% revenue growth despite a lower base. In fact, in the last year quarter, we had seen a decline of 13%. On that, they're expecting a growth of just 6%. Margins are expected to be around 20%. And the biggest concern point for Page Industries is the valuations that we're looking at, which is around 52 times, despite the fact that over the last 1 year, nearly 21%, we have seen a consensus earnings downgrade. And hence, Citi has maintained its sell rating and a target price of 31,300. When it comes to Bata Industries, again, similar kind of disappointment that they are seeing when it comes to earnings. Even in past, Bata has continued disappointed on the earnings front, and going forward also they are expecting not so great Q4 numbers coming in from Bata. They are also saying that going forward there would be further downgrades coming in for Bata. In fact, in the last 12 months, we have seen a 30% downgrade come in, and despite that, they're expecting more downgrades to come in. Again, for Bata also, valuations are expensive. As per the brokerage, they are trading at around 46 times their 1 year forward P, and hence they have maintained their sell rating with a target price of 1,000 rupees for Bata India.
Thanks, Amit, for that roundup coming in on Bata and Page Industries. But tell us a little bit about oil as well, because oil has extended gains and has now also surged to over $91 per barrel. Crude has seen this surge for the first time since October 23rd. So what are its implications on Indian oil companies as well?
Well, for Inc, if you see, definitely rising oil is negative, given the fact that India imports nearly 80 to 85% of their crude requirement, and currently crude prices are at $91, which is at a 5-month high, in fact highest since October 23rd, 2023 that we are seeing. Now this is definitely negative coming in for the oil marketing companies, given the fact that increasing crude oil prices decreases their gross marketing margin that they earn on selling every liter of petrol and diesel. In fact, on diesel and petrol, the margins might have turned negative given the fact that crude has risen to around $91 per barrel level, and with every 0.5 rupees per liter change when it comes to marketing margin, the EPS or the earning the EBITDA of oil marketing companies, that is Indian Corporation, BPCL and HPCL, it's impacted by around 7 to 11 odd %. For ONGC, if you see, however, rising crude oil prices should be positive, but given the fact that the government of India yesterday only increased the windfall taxes, largely the impact is expected to be neutral for oil explorers like ONGC and Oil India.
All right, Swami, thanks so much for taking us through that. We'll be watching out closely on those stocks as well. But Winnie is joining us with the key takeaways from the management meets of both IA Labs as well as Zepto. Good morning, Winnie. Take it away.
Good morning. Let's talk about IA Labs first. They met with the brokerage firm Nuvama. Now Nuvama is saying that key highlights that have come in and seems like a positive highlight, right? When you look at it in terms of overall EBITDA margins, they said they are likely to improve by 100 basis points every year. US business also shall turn into a better EBITDA margin due to its own front-end business, as well as the Unichem turnaround is something that has already begun riding, and several strategic initiatives will work over there. Other than that, overall domestic business, I believe, also is something that shall increase in the range of 12 to 13% CAGR growth, largely driven by volumes. When you're talking about volumes, also Zerodol sales, when they say they are on track to grow at around 12 to 13%, reach 1500 crores by FY25 is the highlight coming, as well as CTD is comfortably going to be expanding in the 17 to 18% range. So seems like a quite bit of a positive highlight that has come in, at least from IA Labs management meet. Other than that, Zepto management meet, and they met with Goldman Sachs, where they're highlighting that they expect the gross order value to grow at around 100% for the next few years that one could watch out for. They expect the EBITDA to break even by September. So yes, FY25 second half, we could expect it to be on the positive side, EBITDA positive, gaining in share, especially in terms of delivery as well as omni-channel platform is what they're expecting. And it does not need any raise of capital. So yes, they may look into public listing in the next 1-2 years. That's surely something exciting that we could watch out for.
Absolutely, Winnie. So that is exciting commentary coming in from both those managements as well. But with this, we're timed out on this segment. We'll see the other side with some more stock-specific action.
Hi there, welcome back. Still watching Market Cafe on ET. Now let's go across to my colleague Ansh to understand what the FNO snapshot looks like for the day. And Ansh, good morning. Take us through what the derivative outlook is.
Right, so let's start with Nifty first. In the previous session, Nifty got a bit volatile. It started with a gap up opening, then fell by around 250 points and then recovered back by around 200 points to give a record high closing. However, it closed within its resistance zone of 22,500 to 22,550, which keeps bias a bit cautious here. Index needs to come out of this range decisively to be positive. Whereas if we talk about FNO segment, then in index future, we are seeing open interest declining by around 3%, indicates short covering, which is a bit of positive sign. Whereas on option front, we are seeing call buying happening at 22,600, indicating option traders expecting Nifty to go around this level. Moving on to Nifty Bank, as you can see in the chart as well, in the previous session, Nifty Bank gave a decisive breakout from its key resistance of 47,700, which keeps the bias positive. Whereas on in future front, if you'll see open interest declined by around 11%, indicating short covering, which is also a positive sign. Whereas on option front, we are seeing call buying happen at 48,500, indicating option traders expecting Nifty Bank to go about this level. Let's also see what FIs did. Index futures, they covered around 9,200 longs. In short side also, they covered around 7,400 shorts. So net to net, we are seeing a reduction of around 1,800 contracts on downside, due to which the total position has slipped a bit lower from 43.8% to 43%, indicating their cautious stance in the market. Let's quickly have a look over the FNO stocks as well, which will be in focus. And we are seeing strong long build-up happening in IA Lab, Bandhan Bank and UPL, whereas short build-up in Dabur and India Mart. So keep an eye on the stocks.
Absolutely, Ansh. So keep an eye on all of those counters, but which are the counters that we should keep an eye on account of news flow then?
Yes, so Ultra will be the first stock in focus on the back of commissioning of 100 megawatt EC solar or a project connected to interstate transmission system. Company's stated commitment to increase green power mix to 5% by 2030. Apart from this, RP Tech will also be in focus. The company has accepted new purchase work order from an MDC data center worth around 1,065 crore and another for 445 crore as well. Prestige Estate is also in focus as they have acquired 21 acre of land in Whitefield, Bengaluru for around 450 crore. They plan for residential development spanning approximately 4 million square feet of developable area comprising of around 1,800 apartments. The projected gross development value for which is around 4,500 crore. Soloville will also be in focus on the back of of consumer wear manufacturing facility in Rajasthan glassware furnace that is coming up in the same facility, which will be operational by the end of first quarter of 2025. Lastly, Cipla will be focused as on the back of US FDA inspection at company's manufacturing facility in Maharashtra between 28th March and 4th April. Company has received 4 inspectional observations in Form 483, which is a bit of negative sign.
Absolutely, Ansh. So we'll keep it on all of those counters on account of news flow then. But let's take a look at the counters that the brokerages have on their radar as well. And the first one on my list is HDFC Bank and Macquarie maintaining an outperform with the target of 2,000 on this particular counter. They're talking about a consolidation strategy that is playing out well for the heavyweight. And they're also talking about how there's a positive surprise on the deposit growth as well. In terms of the valuations, what Macquarie has to say is that they remain attractive. So this is the time to add, and that's the word coming in from HDFC, from Macquarie on HDFC Bank. Now, moving on to Dabur then, and Citi is talking about how they're maintaining a sell and cutting the target to 500 from 520. They're talking about challenges across demand and profitability continuing, and that profitability miss in Q4 as well. In terms of key factors to watch on Citi's list for Dabur, they're talking about acceleration in volume and revenue growth and talking about recovery in profitability as well. So that's the word coming in from Citi on Dabur. But moving on then, Aavas Financiers also, they have a note on, and they're talking about them maintaining a buy with the target at 1,830. They're talking about the branch rollout picking up pace, as well as the declining trend in names which will be arrested, and ROAs improving quarter on quarter. So that's the word coming in on Aavas Financiers from Citi. But Snehi, which are the ones that you're looking at as of now?
Well, I'm largely looking at IndusInd Bank as of now because we have 3 brokerage notes coming in on this bank in particular, and those notes are coming from Citi, Morgan Stanley as well as Jefferies. Now, when you take a look at what's happening with IndusInd Bank on account of the Citi's note that's coming in, they're saying that advances growth has been faster than what the street was expecting. The LDR, that is the loan to deposit ratio, has also expanded, which is a good sign coming in, and deposit growth lags advances growth as well. And they expect the return on assets and return on equity to be stable going ahead. They have a slightly downward bias in NIMs on a sequential basis. That is what IndusInd Bank has reported. And credit costs will remain within the guided range. This is what Citi believes for IndusInd Bank going ahead. Moving on then, let's also take a look at what Morgan Stanley is saying about IndusInd Bank and their performance. Loan growth has improved and it remains healthy on a year-on-year basis. Retail deposit growth has also moderated and overall deposit growth was 14%. Lastly, let's also take a look at what Jefferies has to say on IndusInd Bank, because they say that loan growth has moderated and core retail deposit growth is steady, and they're also saying that healthy loan growth is being seen. Stable NIMs should aid earnings going ahead as well. So while this was largely what these brokerages had to say on IndusInd Bank, but let's talk about another Q4 provisional update that we got yesterday, and that is Bajaj Finance, and what stellar set of numbers that company has gone ahead and reported. Now, according to the update, the company's customer franchise witnessed significant expansion, reaching 83.64 million as of 31st March 2024 compared to 69 million in the previous year. This represents an increase of 3.3 million customers during Q4 itself, and despite facing restrictions imposed by the Reserve Bank of India on certain loan products. Remember, in November last year, the Reserve Bank of India had placed some restrictions on 2 of Bajaj Finance products, those being the Insta EMI and Ecom card, which is their EMI card as well. So on the back of these restrictions coming on 2 loan products, despite this hiccup coming in for Bajaj Finance, they've still ahead and managed to book new loans totaling 7.87 million during Q4 of FY24, reflecting a 4% growth compared to the same period last year. However, when you look at it on a sequential basis, the new loan book was slightly lower by 0.8 million due to the aforementioned regulatory constraints. But one of the standout achievements and what really stands out from its Q4 update was the robust growth in assets under management, which surged 34% on a year-on-year basis to approximately 3.3 lakh crore rupees from as of March 31st, 2024 compared to 2.47 lakh crore in the previous year. Now, the company has reported a growth of approximately 19,400 crore in AUM during Q4 of FY24 itself. Now, the company's liquidity position also remains strong with a consolidated net liquidity surplus of approximately 15,700 crore as of 31st March. Additionally, the company has witnessed significant growth in its deposit book, which stood at approximately 60,100 crore as of 31st March 2024, marking a year-on-year growth of 35% compared to 44,666 crore in the previous year. Let's also take a look at what brokerages have to say on the back of these provisional updates that Bajaj Finance has come out with. And you have 4 notes coming in this morning from Citi, Jefferies, JP Morgan as well as UBS. Citi has maintained a buy with a target of 8,907 rupees, 75 rupees. Jefferies has maintained a buy with 9,400 as their target. JP Morgan has maintained an overweight rating with 8,500, and UBS, however, on the contrary, has maintained a sell rating for the stock going ahead at 6,800 rupees. So, well, that's largely the lowdown coming in on Bajaj Finance this morning.
Well, absolutely. And with this, we're timed out on this edition of Market Cafe on ET Now. From me, Shreyanti Singh, Snehi Shah, as well as the show's producer, Somashri, and the entire team that put this show together. Thank you so much for watching. You don't go anywhere because the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.